Welcome along to our latest market update recorded on the 2nd of September 2024. I'm Paul Brown from Wealth21. Let's move on to the update. So firstly and importantly, any information in here is just general information only, doesn't relate to your particular circumstances. If you have any questions relating to your circumstances, please give us a call or seek advice from a qualified financial advisor. Let's just look at the index returns as at 31st of July 24, so that's a bit over a month ago. The point to note, over that time period, Australian property or listed Australian property, A-REITs, actually had a return of 27% over the last year, and the other sector that really stood out there was over 22% for global shares in Australian dollar terms. The other growth sectors were quite good as well, Australian shares and Australian property and global property. In terms of the defensive sectors, we have pretty solid returns from them as well. Cash rates are obviously higher now, so the return on bank bills is 4.4%, and bonds, Australian bonds and global bonds, towards 5% over the past 12 months. Of course, with the correction in the bond market we saw in 2022, the return on bonds for both Australian bonds and global bonds is virtually zero over the past 5 years. Let's move through, look at some of the metrics we cover. Interest rates, Australian interest rates, still on hold at the moment at 4.35%. They did get down very low in 2020, 2021. And then, of course, the Reserve Bank of Australia started increasing interest rates very aggressively in 2022 to counter inflation. Looking at the inflation rate, it did jump up almost towards 8% in 2022. It's now around the 4%, or it's 3.8%. Currently, it's still a little bit higher than the Reserve Bank would like. They would like the inflation rate closer towards 2%, which is where it was earlier in this 10-year period. Just looking at the 10-year bond yield, and again, when back in 2020, 2021, the yield on 10-year bonds, the risk-free return was down around 1%, and then in 2022, when the central banks and Reserve Bank of Australia started increasing interest rates, the bond rates rose very sharply. That actually, when bond rates rise, of course, the price of bonds fall, and that was really the catalyst for the correction we had in the bond market in 2022. So the 10-year bond rate still sitting up above 4%. It's tracked down a little bit. It was almost 5% in the latter part of 2023. Let's look at the Australian share market. This is the ASX 200 over the past 10 years, and as you can see, it's up around the high point of the market. Okay, up above 8,000 points on the ASX 200. Looking at the A-REITs, or the Australian listed property market, and again, it's been at a pretty, it's near its high point. It did fall very sharply with COVID, of course, because lots of concerns because people couldn't go into the office, and so the listed real estate market, which has a lot of office buildings, shopping centres, and so on, did fall very sharply with COVID back in March 2020. But it's recovered over that period of time, and it's pretty much at the high point of that market at the moment. Looking now at the US market, this is the S&P 500, so it's the broad index of top 500 stocks in the US, and as you can see, that's a very high level. It's had a very strong run pretty much since October 2022. It's run up very strongly. This next chart actually is the NASDAQ 100. So this is the top 100 technology companies. And we've spoken in previous videos about the Magnificent Seven, which has some big tech companies, Microsoft, Nvidia, and Apple, and so on. And you can see that market, particularly in the last few months, has risen, quite sharply. And final chart, we always have a look at the gold price, and this is a gold ETF that you can buy in Australia, and so it is, gold has been a hedge against inflation, and over the past 10 years, you know, it's pretty much almost gone up 2.5-3 times value, and it's at a very high point at the moment. That's the gold market. So any questions, please feel free to give us a call or send us an email. Thanks for listening.